So good morning. This is SME Unleashed with Raymond Mutura from the Centre for Research on Organizations, Work and Family. My colleagues will not join us today, but we have a guest, Sam Ndonga. Maybe he can say something so that you can get to hear his voice.
Hello, everyone. My name is Sam Ndonga, as mentioned, and I'm a finance and investment advisor, having worked for a number of years in the SME finance space.
Okay, karibu sana.
Asante.
Yeah, maybe you can start on how you're associated with Strathmore.
Yes, I think as I was mentioning to you before we came in, what I tend to think is a long history with Strathmore, which started back in, I think that's 2010, yes, when I came here for my MBA. And after my MBA, there was a bit of a break. And then I was invited to be a guest lecturer in the executive programs under the agribusiness team. And I did that for about 4 years as a guest lecturer. And then the last 3 years, I've been a part-time executive fellow within the same team as well.
Okay.
So I do probably about 2 or so classes maybe in a year.
Okay.
Yes.
Yeah. And I think your MBA was very relevant to part of growth and expansion of potential businesses in the market. The topic was on what? Franchising.
Yes, so the topic was on franchising as an SME development strategy.
As an SME development strategy.
Yes.
Wow.
Yes.
That's a powerful paper.
Yes. But actually that topic was, it changed severally. I think the first thing, because I didn't think I'll probably get any businesses here locally to sort of like, interview for my research and all that. I didn't think I'll get data locally. So initially, actually, it had an addition there. I think it was franchising as an SME development strategy, the case of South Africa.
Oh.
But I remember when I met my supervisor at that time, I think it was Dr. I think Brian, I think is late. It was an Irish.
Oh, the Irish.
Yes.
Is late. Yeah.
Yes, yes. He told me, no.
Why South Africa?
Why South Africa? Focus on Kenya.
Focus on Kenya.
So I knocked off the South African part.
Curious, why were you thinking of South Africa? I know there's always been various franchises who've tried to do several things. Is that the reason?
I think it was also because their market is very mature from like the franchising market is very mature. And also because of, I think because of the apartheid period, they had to really sort of like innovate locally. So they had to figure out solutions locally to get the franchising to work. So I thought, that could be an interesting model, case to look at. But based on his wisdom, which I came to appreciate later, just said, focus on Kenya. If your solution is for Kenya, try and get businesses in Kenya.
Interesting.
And of course, the challenge there was because I knew there was not going to be so much data available. Now I had to use a case study approach, which is as you know, for it to meet the quantitative threshold.
Yes, it's a bit tricky.
Yes, a bit tricky.
And we won't go into that. I think most interesting is that it is a growth strategy for SMEs.
Yes.
Why did you pick on it? Just out of curiosity. Why is it that you were thinking of SME growth?
I think part of that was informed by my work. I think at that time I was still in the banking sector. I think I was with Standard Chartered at that time as an SME relationship manager. And I could see the challenges businesses were facing in terms of really driving growth. Part of it was driven by just the lack of capacity, internal capacity to really grow their businesses. But secondly was the issue of access to financing. And so if you look at franchising in a certain sense actually addresses both challenges of capacity and capital, so to speak. Because on the one hand, it forces you to really focus on really developing the systems of your business. For you to franchise, there are certain things, and you can get into that over time, there are certain things you have to put in place for it to work. What that does, it forces you to really just get your system, your business in the right frame.
Yeah.
And second,
it's a tested. It's something tested.
It's a tested, exactly. Yeah. And secondly,
but before we go deeper, what is franchising? Let's break it down for the SMEs who are listening to us. They've heard about it is a growth strategy. Now, before we go into the details, what is it? What is franchising?
I think I'll probably put it in the simplest form.
Yeah.
Franchising is where you basically take your business that you've proven and tested, and you allow others to run branches of a similar business under the same brand, delivering the same products and services under your guidance and support.
Okay.
And you get to earn from that in many ways, and you can get to those details in terms of how you.
And for example, in Kenya, probably who did you look? I know you probably looked at some franchises in Kenya. Then.
So I think at that time I looked at 3 businesses. I looked at Kengeles. Probably the younger generation may be wondering who's Kengeles. Yeah. I looked at Kulakona. That probably sounds like a dinosaur to them. And then I looked at another business called Flame Flavors. Flame Flavors is still active. And these were all restaurant businesses because franchising, that's one of the sectors where it's worked very well. The other sector, of course, is the oil and gas. What you see, the petrol stations, that's actually franchising.
That's franchising.
It's a way of franchising because you're taking the Shell brand and leveraging on that to actually again sell their products. So basically, you're going into a fully tested model. It's a sort of like a plug and play, so to speak. So what you bring, all you bring is your capital into that place. So those are the businesses I looked at.
Okay.
Yes.
And the idea then was to try and look at them as a way of a strategy for SME growth. Now, we've already given some examples of possible businesses that can do franchising. So restaurants, the oil and gas.
Yes.
What other examples can you give?
It can go in many ways. You can even go into, if you look at the major hotel chains, it's a form of franchising because JW Marriott does not run all the hotels. Yeah. You have land in a good place, you put up a building, and basically you get into sort of like a management agreement. Yeah. You're still leveraging on that brand. So it's a form of franchising as well. Okay. Yes, because I think it's just important maybe to put in place what are the conditions that need to be in place for franchise to really work. And the first one is that there has to be a well-known, established brand. Okay. This is a brand that people know, identify with it, for a certain sector, product, or whatever it is. So that's the first thing. For it to work, because you're not going to go and franchise a brand that you don't know. People don't know. Exactly. That's the first thing. The second thing is that you have to have a well-established business model or operating procedures. If you go into McDonald's, the way the burger is made, it is standardized. Yeah. It is clearly documented. So any new person comes and knows this is how you
that's all you've eaten. Most likely you've eaten it.
Exactly. So you have an idea. Exactly, yeah. So you have to have a basically clearly documented operating processes or procedures, a way of doing that or doing the business. Yeah. So that it's a plug and play. Someone else can just pick it in. And basically once they're trained, it's easy for them to continue doing that. And then thirdly is then you have to have a support structure around that, in terms of marketing and all that, because remember, the franchise. So you have two parties there. The franchisor is the owner of the franchise brand. Of the brand, and the franchisee is a person who is basically running the business. Yeah. So the franchisor has to support the franchisees through coordinated marketing, through sourcing supply chain, optimizing supply chain. If it's potatoes, you're actually getting them. You're basically, because you want a certain output. Yeah. You have a suppliers that you've coordinated. You're able to get products coming in. In some cases, these companies would have like central kitchens where all these products are coming. They're being processed and then they're distributed to the various franchisees, if it's like for the case of a restaurant. So those things have to be in place so that then what I'm coming to buy as a franchisee is a largely what we call de-risked business. Yeah. Because one, the brand is known. Two, how to run it is already established. It's been tested and tried and it's shown to work. And then I know I have a support structure that's helping me to market, that's helping me to to source. There's a way of like training, all those, staff and everything. All those things are clearly established.
Yeah.
Things that someone would be struggling to, if they're starting a new business, they have to figure out those things. They've already been figured out for you. So basically what you're doing is bringing yourself to actually whatever capacity you have and money to run the business.
Yeah. Just wondering, I mean, of course, since, we've kind of attached this idea to a strategy that can be taken by SMEs. Hypothetically, I'm thinking a school can potentially be a possible franchise in this market.
It is.
And maybe also because you've worked with SMEs, you may be able to begin seeing some of the challenges why people may not have the mind of a franchise. Yeah. And maybe that is probably just looking at your MBA, who could be some limitations of why franchising is not happening. What potentially could this be?
Good question. I think a bigger part really has to do, definitely one, if you look at the entrepreneur's level, probably the need for to feel maybe like you're in control.
Yeah.
Because I think you almost feel like you're giving away your business somewhere, and people, do you have control of what they're going to do? And a bigger part of that either is informed by just the need to feel like you're in control, but also the fact that probably you feel you don't have a way of correcting or a remedy if at all the issues occur. Especially like in an environment where sometimes the court system, justice system, doesn't serve you as it ought to serve you.
Yeah.
Contract law is there, but it's largely abused. And so you're wondering, okay, let's say for a school, let's say for example, maybe Robert and Sam Elementary School, and someone goes, you've built up a business here. First of all, you've tested it works, and then now you tell someone to open a school in Kajiado.
Robert and
Same
Sam
name,
Kajiado.
System, structure, everything same
campus.
Yes. But then you go there and you find they're doing different things. You find they've added a teachers training institute, or they've added a mechanic, whatever it is.
Yes.
Yeah. How do you deal with that? The easiest thing would be, you would expect first of all that there is enough trust level or integrity that the person is actually going to follow through with the structure as it is, the brand and the franchising system as it is. Two, the fact that maybe if you go to the court systems, that you're going to get remedy and get that issue sorted out. I'll give you an example of one of the restaurants I looked at. They had clearly structured in terms of even the menus and everything else. It was basically mostly chicken and chips. And the guy went to one restaurant, I think it was in Eldoret. Therefore, the guy is selling ugali and sukuma wiki on the menu, and it was not within
the franchise model.
Exactly. Yeah. So yes, the franchisee was responding to a market need, but he was responding to it in a context where ideally he shouldn't do it. I think probably the best thing would have been maybe to engage a franchisor and say, okay, there's a need here for this. How do you go about it? And then maybe you work out something. I think that there's room for that, for that level of flexibility.
Yeah.
So that then you accommodate the needs of the local market.
Yeah.
I mean, if you go to a KFC in Nigeria right now, the chicken is going to be very spicy. Your typical chicken here is going to be spicier there because they
work with spices.
Yeah, that's a whole idea. So I think one, the need for control. Two, feeling like you don't have a way of dealing with the challenges that they arise, especially from a legal perspective. And so, and also there's still very limited understanding of actually what franchising is, the benefits, and it's just a lack of
Yet it's very curious to see that. When you are beginning to think about the topic, you are thinking of it in a South African context.
Yes,
and you kind of looked at it as it was an innovation for growth. Yeah, so I don't know that it's the peculiarity of Kenyans, as they call it, that you're not able to get into a system where gentleman agreement is gentleman agreement, and of course a court process, you'll still follow the normal court process. But then if we don't have a franchise model, and I think you have a lot of experience on other things you've done, you've worked in the SME sector, just looking at even just your teaching and your interventions that you've been having in the university here, in the agri-business program, what could you see? How can you paint the picture of the agri SMEs and begin saying, okay, if you can't grow using franchise, maybe you can grow this way. What would those options be?
I think, at the end of the day, I think any business would need to have I always say there are two sides to the coin, as I mentioned. There's a capacity side and there's a capital side. Yeah. And the capacity means, you're very clear on, you have clear governance structures, management systems, you have a clear strategy, business model, you have, operating capacity, you have the right staff. Yeah. Of course, it assumes that you have a product that is already has a demand in the market. Yeah. And then on the capital side, it's how you fund the business. So that's on the capacity side. Capacity side, yes.
Here we call it MPG. We normally say mindset, processes, and governance.
Yes, mindset, process, and governance, exactly. Yeah. So, and you have on the capital side, how are you funding that business? Either you're going to fund that business using internally generated cash flow, which if you're in a slow, I would say maybe in a sector maybe where cash flow is not, you're not generating as sufficient cash flow as possible. Yeah, it means then your growth is going to be slower. Yeah. Then you have to look at, of course, options around debt, which you can get from many sources, banks being one of them. You have private credit funds. You can raise money from even friends and family. Yeah. You have the equity option as well. So I think so for me, really, at the end of the day, you really have to determine in terms of, you have to have a clear growth plan. Okay. What do you want to achieve by a certain timeline? Yeah. How are you going to get that done? And then seeing through that process. And I think the challenge is always about seeing through that process for many entrepreneurs. So, capacity, you can source a capacity in many ways. Yeah. You can internalize that capacity by having the right staff there. It comes at a cost. Or you can actually utilize, fractional resources, or you can utilize advisors from out there. Strathmore here has a lot of programs and staff who are actually engaged in that. So whether you're going through the franchising option or just whatever option, organic growth, there has to be a clear growth plan. Yeah. There has to be a clear plan on how you're going to execute that and how you're going to fund that growth. So it's just that franchising offers you certain aspects of capacity. You have to address that. Yeah. But the more you get out of new franchisees, you also get to learn from them as well. Yeah. Yeah. But secondly, them funding those franchises is your way of actually funding your growth. Yeah. Because then those branches, which you'd have funded with your own capital, you're basically offering the brand, and others are actually funding to set up those businesses. Yeah. Okay. Yeah. Very well. So two aspects there that I think you're really putting a bit of emphasis. Capacity and access to finance, access to money that can grow. So we probably can take a break from there and just there are two options. So we can still go deeper into looking at what other models can come. For example, a school, from a franchising perspective. And then maybe also if you can talk about your experiences in the SME, access to finance, what you've done on that. Yeah. Okay, very well. So thank you very much. This is Raymond Mutura taking a break here at SME Unleashed, and we have a guest, Sam Ndonga. Would you call yourself a consultant, or what is the name? I prefer calling myself an advisor. An advisor. Consultants tell and go. An advisor walks with you. Okay, very well. So welcome back. This is Raymond Mutura from the Center for Research on Organizations, Work and Family on the SME Unleashed. Today we have a special guest. He said he's an advisor.
Yeah, and he's
Sam Ndonga.
He's here with us. He has quite a bit of experience. We were beginning to talk about his MBA study, which was on franchising, and he looked at it from the restaurants. Is it
food retail?
Food and retail,
food retail business.
Yeah, so maybe there you can go a bit into at what point do you feel one is ready for franchising?
Yeah, that's a good question. Actually, based on the research that I did, a number of things came out clearly, and one was really based on other businesses that had done franchising.
Yeah,
is that many of those businesses were, based on evidence, were ready after about 4 years of the business model being tested. So you start up a restaurant today,
and in 4 years you're ready to franchise.
So about 4 years, but you have to have a clear focus that actually I'm planning to franchise. You can't say in 4 years' time now I'm ready to franchise. No.
Okay.
You have to have the mind that I'm starting this business. I want to build a business model, a replicable business model, and so you have to put in work in building the brand, as I mentioned. You have to put in the work in building the business model, the operating model, and make it replicable and put in the right systems in place, because really all the way from how do you prepare food, how do you train staff, how do you set up a branch, what are the things that must be there in a branch, what is the bare minimum, all those things, so that by the time you're franchising, you're literally handing over someone a manual, a replicable business model. You've set up the supply chain network, all those things. You've figured all that out. Because what you're selling as a franchisor, you're selling to people a de-risked business. You're telling them this business has been proven.
It can work.
It works.
And this is
profitable.
Manual.
And this is a manual. So invest 5 million shillings to open a branch. And I can tell you, based on experience, you'll probably have broken even by a certain period of time, whatever it is.
Yeah.
So you have, based on the various research I looked at, many of these businesses had done at least 4 years of
testing their model, basically. Yeah.
And not just one branch. Many of them had at least 3 to 4 branches.
So they had started the branch one,
the replicability of that model
into 3 or 4 other
3
branches.
to 4 others, and figure out all the challenges, the lessons, all those things. So because that's exactly what you're selling. You're telling me you don't have to worry about startup challenges.
Okay.
All those issues.
Now, of course, there was a bit of your research and a bit of practical knowledge that you have based on just dealing with SMEs. Yeah. So many may not already have thought that I'm going to go into a franchise model at the moment. Many probably are thinking, okay, whatever we are talking about is a good idea for growth. It's a good idea for growth as a strategy. But if I'm already kind of used to doing something, how do you think I should get into this mode of thinking maybe this school that I have been running for 20 years is actually franchisable? Is that the right word?
Well, we can always in this day and age you can come up with the words. I think even before we think about the issue that it's franchisable, if I use your word, there's someone who made a very profound statement, and I found it to be very powerful in the way it changes your frame of thinking as a business person. And he said, when you start your business with the mindset that you plan to sell that business.
Okay.
So you ask yourself, if I'm going to sell this business, what must I do to ensure this business is as attractive as possible to a potential investor in X
number of years?
If you compare what I talked about franchising, getting ready for franchising, and this mindset is the same. It's a mindset of how to grow this business as if I'm going to either sell it to an investor or sell it to a franchisee. And actually that franchisee in a certain sense is an investor in your business in some form or shape, because they're actually helping you to grow your top line.
Yeah.
So that I think has to be unless your business is a livelihood business. You know the one?
Yeah.
You make 1,000 shillings, you eat 800, you buy 200 stock tomorrow. Unless it is a livelihood business, well and good.
Yeah.
But if really your goal is to build a sustainable business, even a potential business that outlives you, you have to have that mindset.
Okay.
Yes.
Yeah. So that's critical.
That's critical.
Yeah.
Yes.
Okay. And maybe for some of our listeners, ideally then is if you've ever thought of your business as a lifestyle business,
yes,
or you've only thought of your business as, doing things kawaida and, as things are, then the franchise model and any other aspects of growth becomes difficult for you.
That becomes challenge.
Yeah,
because all starts, as you said, with the
mindset.
The MPG approach, the mindset.
The mindset.
Yeah.
Okay.
Yes.
All right. Very well. But then after that, it means then you have to spend quite a bit of time on building the model to make it a brand. Yes. So you have to really work on many things to do with your processes, how things are supposed to be done, etc.
Yes.
And that's the only time you can now begin saying, okay, how can I replicate this? And as you say, you can then spend 4 years trying to do 3 or 4 branches. And then maybe after that, you can think of inviting others.
Yes, of course. I mean, depending, of course, on the capital outlay for any business. I mean, I'm assuming like for a school, it's hard to do like 4 branches in a certain period of time. So that example was purely based on research on food retail business, the 4 to 5 outlets. But I believe for a school, it's possible to franchise even from the first branch, from the first school that you have. And then the principles remain the same.
Yeah.
But the brand is clear. That means that school is well known, it's performing well, is known to churn out, good students who are not just performing, but also, are going into, becoming, ambassadors for the brand.
Yeah.
It has a clearly tested operating model, how it onboards children, how it runs its programs, how it onboards teachers, how it continues to build the capacity of those teachers, all that. And then clearly figure out how to ensure that, the school, the support structure is there. That way then, it becomes easier, because then when you're supporting someone else is starting up a branch, or so to speak, or
they already have a how-to.
Exactly, you have a how-to.
Yeah. And I think that is beginning to happen. If you look at even just in our market, in the schools, we're beginning to see that already internally. You have schools that have several branches. I don't know whether you would call that. It's a form of franchise, but it's an internal franchise. Yeah. So I am here at school in Buru. I know a couple of schools in Eastlands who have eventually ventured out into. You find they have a branch in this other side of town, Mombasa Road, and then you'll find that they'll probably have another branch in Kitengela or Kiserian. Yeah. So we're beginning to find this kind of models of potential schools that are, you could say, expanding out. Yeah. But also we are beginning to see some, and I think for some time we had some South African models coming to even try restaurants and hotels. So if you just look at that as a way of growth, is that something we can consider, we can think about, especially when we're looking at our SMEs?
I think it's possible. I think, regardless of the challenges probably that exist in our environment, I think it's possible. And I think it's something that people should explore.
Yeah.
I think when you talk about the various schools, definitely I think that's, of course, they're expanding. The question is really, if you go to one school and go to the next one, are you going to get the same experience?
Will you get the same experience?
Yes. Yeah. That's always the question. Because for it to really work, you have to really have a way. It's almost like you have to standardize.
Yeah.
Yeah. Because when you standardize, you eliminate a lot of complexity.
Yeah.
Because then there's clarity in terms of how things are done. For everyone, including the parents and everything and all that. So, but I strongly believe, I think it's something that can be done, and it's something that business people, SMEs, should actually consider seriously.
Yeah.
Yes, but of course it means then you have to invest the time. You really have to be patient, and really just get the work done. It's the same way if you really want just to grow your business organically.
Yeah.
It really, in my view, actually, there's no difference.
Yeah, I think it's back to the mindset.
It's a mindset thing.
Yeah, so you just decide that at any one point I'll grow a business that is, something I can sell, that can have this value. This value should be X. Yeah. So it's just now deciding whether I am ready to replicate it. Yeah, and run around asking, inviting franchisees that will be able to eventually do what we have put together.
Yeah.
Okay. But what other ways of growth are there? You probably have been in this world of advisory for some time. So we talked about capacity, but also we talked about access to finance, access to capital, etc. So what can you say there?
I think, of course, another way, of course, is of course getting into joint ventures. With like-minded partners, and that part is very, very key. If you get the wrong partners, it can be frustrating. You can end up even destroying your business. So you have to really get the right partners. So joint ventures, where then what you're doing there, you're not only bringing in people who have capital, but also they're bringing their capacity to help you grow your business. So of course, private equity is also one way in terms of if at all, and the right private equity partner is important. I strongly believe that if the only thing an investor is giving you is money as an equity investor, then it's a bit of a challenge. I think they should also bring in a bit of capacity into the business, either at the board level, or either through capacity building, technical assistance, linking you up with the new sources of knowledge or networks and all that. At the end of the day, that partner should be able to bring more than just money. Because if it's money, then you can easily go to a bank and get the money, do whatever you need to do. So it needs to be more than just money.
And what do you think the SMEs in this market have that appetite for going to PEs, private equity?
I think that has been it's been a challenge. It's been a challenge. I think again, it's just also maybe the issue of control as well. In my view, I think everything, all these issues point back to the mindset.
The same mindset.
Because I remember some years back exploring and asking ourselves, if there seem to be restaurants, let's say restaurants, for example. You have almost similar restaurants, like maybe Nakuru, Nairobi, and Kisumu. Could those three owners form a holding company and actually run these restaurants as
one brand?
And actually now optimize their sourcing and everything, capacity and all that. Is it possible? It is doable, but the question is there willingness? I think the biggest challenge we face is this issue of, it's a mindset thing. This is mine. You almost die with that business, and it never amounts to much. That's I think for me that's a first barrier that we must overcome. Before even discussing about everything, someone has to see the possibility. That's number one. Someone has to have the willingness to take that risk and say, let me push this line and see how far that we can go.
And I don't know how we are going to overcome that, because you see, it can get very tricky to lose control. And I guess that is what we have as entrepreneurs. Of course, the way we set our businesses, sometimes we have the mind of starting it as a lifestyle business. It doesn't have to grow beyond me. As we call it, side hustle. We juakali, we have all these peculiar way of looking at ourselves. Even when we are doing well, we still probably just underestimate it and say, look, I'm just doing something small. Tunajaribu. So is that where the mindset is?
It's a mindset thing. It's a mindset thing. And I think a bigger part of that also, I think, is just exposing people to what is already happening. I think the more people can be exposed to these possibilities, the more they can see what is doable. If you look at most international brands that have entered this market through Kenyans, it's because actually they went out there and saw the possibilities and came back
with an open mind.
Came back with those brands. So I think for me, exposure is key. Really helping people to see what is possible. And I think the challenge with most trips, business trips, for even like the banks organize out there, you're mostly taken to these these big businesses or factories and all that. But I think, what about actually the small businesses that are?
So we really need to expose SME to SME.
SME to SME. Yes. SME to SME. If it's a coffee business, take them to a coffee business like in South Africa.
So that they will be asking the same questions.
The same question.
How did
you move from one branch?
Why are you using this machine and not this other?
To 100 outlets.
Yes. Okay. Very interesting. But I know you've done work in looking at we could say, fundable or capitalable. Investment ready.
That's a term
what
that
would you say?
used.
What is the challenge of investment? I know you'll go back to mindset, but expound a bit on it.
I think beyond the mindset, I mean, definitely mindset, I think, applies everywhere.
Yeah.
But I think when it comes to investment readiness, there's, of course, every investor has their own criteria. So it's possible that your business could be viable, but you just don't meet the criteria of the investor.
Yeah.
So that's the first thing. We have to provide that caveat. So sometimes it's just that the investors have their own limited criteria. And so out of that, they eliminate a lot of businesses which are fundable, but just don't meet that criteria.
Yeah.
But those ones that then meet, more often than not, the reason why they never make the cut is starting from the top. You clearly see weaknesses from a governance and management perspective.
So you go into governance.
Yes, and a management perspective. And remember, any investor, more often than not, a bigger part of that, they're investing in the owner of that business. Your integrity, your grit, all those things, your understanding of that business, the trust that this money, the commitment you've made, you will deliver, and it also make good our payment.
Yeah.
Okay. So you already see gaps there, regardless of how good the business appears to be. You're like, it probably doesn't make sense. And I also have my experience where I've invested in a business that the promoter just swindled, they embezzled all the funds.
Okay.
Yeah. So we had trust, but then by the time we were realizing, me and my friend had put in money there, over 5 million shillings.
And it all
went. So that's the first thing. Secondly, then, the systems, governance, all those things are good, but then you look at the numbers and you just don't think the business is going to meet the commitment. They don't have the sufficient, capacity to be able to service, or to meet the requirements of the investment. Or they just don't have proper records. Like you can see the business is running, but because the way investments is done, there's certain...
It has to be clear.
It's ways that things are done. If you need to do a financial model, you need proper financial statements.
Yes.
So, I have an example of this business in Uganda. The net worth of this promoter was $50 million. Real estate, FMCG distribution, they wanted to go into food processing. If I had my own money, I would have put that money in that business. But because it was a fund, the guy did not have proper financial statements. The auditor he started with when he was like a small business.
It's the same auditor.
He maintained the same auditor. So this auditor the business had outgrown him. Yeah. So the books are not done properly. I remember one time calling the auditor to ask a question, and the guy was in a bus somewhere in Busia, coming into Kenya.
Yeah.
In the bus, it's noisy and everything else. So you can see. So this business missed an opportunity to get about $10 million of investment to go into food processing.
Because of no records. No proper records.
But not because the guy did not have the net worth. He's big on real estate, $50 million. I mean,
yeah.
So you see, there could be many other things that prevent you from, and sometimes also you don't agree on terms. You've gone all the way to the end. And then the terms, you probably don't like the terms and all that. It can be many things. Yeah.
Yes. I'm interested in going back, and I think we're going to take a break now and just go back to this idea of these gaps. Yeah. So at some point you talked about the management and governance gaps, because it would be nice to unpack that.
Yes.
And then maybe to also look at all these things of records, because it touches a bit on both, processes.
Yes. Processes, people, systems, policies.
So we can touch a bit about that.
Okay.
So we're taking a break. This is Raymond Mutura on SME Unleashed from the Centre for Research on Organizations, Work and Family. We're talking about various things. We started with franchising, and now we are going into just a general topic of growth. Franchising is one way of growth, and we'll be back to just look at, what are those gaps that will prevent SMEs from being fundable? Welcome back. This is SME Unleashed with me, Raymond Mutura from the Centre for Research on Organizations, Work and Family. And we have a guest,
Sam Ndonga.
Sam Ndonga. As he has mentioned, he's an advisor.
Yes.
So being an advisor, of course, you've been able to do quite a bit of work on funding SMEs.
Yes.
Yeah? And I think when we just took a break, we were talking about the fact that it is sometimes difficult for a funder to put money into some of these SMEs. Mm-hmm. So just looking at the numbers, what would that look like?
Mm-hmm. Well, I don't have the general numbers, but I can use my experience.
Of course.
Through the farm that I was running until end of last year. We were working in over 20 countries in Africa. Mm-hmm. And I think for those 7 years, we supported these investors to place over $300 million.
Whoa.
Into companies, into through financial institutions that would lend to SMEs and all that.
And $300 million in Africa.
Yes.
Where?
Yes.
Okay.
Yes, including Kenya as well. Kenya, Uganda, Tanzania, Mozambique, Malawi.
So money there is.
Money there is. The challenge is, as we started off earlier, is the number of structural issues around it. So on average, would screen. That's at early stage. Would screen about 150 to 200 companies.
Possible recipients.
Yes. But by the end of the year, we'll probably invest in about 5 to 10.
Whoa.
So we knew
that's 5%.
That our conversion rate was going to be 5 to 10%.
5 to 10%.
Yes, 5 to 10%. That's like and that's if you talk to anyone in the funding space, more often than not, that's
a number.
That's a number. But I think it doesn't tell the complete story because, as I mentioned, there are certain structural challenges in our market.
Yeah.
If you look at the potential sources SMEs can get funding from, beyond, of course, we call them, there's the 3 Fs, which is the friends, family, and the fools, as they say. And the fool could be knowingly doing it or unknowingly doing it.
Yes.
You have the banks, and of course, banks that you can go all the way to microfinance banks, SACCOs and all that. And you, of course, the impact funds, and there are many other non-traditional sources, some people even go to Sherlock's and all that.
Yeah.
But if you look at, so let's talk about locally here. Potentially banks as a source of funding for SMEs. I think the challenge we face with banks is, yes, they are trying, but I don't think they're doing enough. And why? It's because they have a much more attractive option.
Yeah.
And that is the government papers.
Attractive and comfortable.
So it's an easy, I put money at 15%, 12%, put my feet on the table and relax.
And it will come.
It will come.
It's guaranteed.
But I think for me that's very short term. It's a very short term. It's short termism from a perspective, because if we're not growing our own economy, eventually it's going to catch up with everyone.
Yeah.
It's going to catch up even with these banks. Yeah, because.
And growth in economy here, we mean businesses are growing,
supporting
employment
SMEs
is happening.
To funding them to grow, funding them to create employment, because every SME you're supporting, every job that is being created is supporting 4 to 5 other people.
Yeah,
it's ensuring there's food on the table. It's ensuring, and not just food, nutritious food. For brain development and everything else. It's ensuring there's school fees to be paid. Yeah, people can meet their healthcare needs. You're literally investing in the health of the economy and of its people. Yeah, as a business. Yeah, and I think really banks have to really see this perspective. Yeah, yeah.
Well, banks and government, because we always
and government as well.
Because we always say, and I think one of the biggest dilemmas we have, and that's why we started this program, is you have the biggest employer is actually the SMEs.
Yes.
Yeah, because we talk about 80-90% of employment is SMEs. GDP wise, it's 30-40%, but it can be more.
It can be more.
Yeah, and I think this is probably what we need to emphasize.
Exactly.
Yeah.
Exactly.
Yeah.
So I agree with you.
Yeah.
The government has to really stop borrowing from the domestic market. And if you remember, if you go back to when Kibaki came to power in 2002, when he said we're not borrowing locally, what happened to banks?
Eventually they were forced
to look around. They were literally even hawking cards, again telling, could you take this card? And companies had money.
Yeah.
Look at the GDP at that time. We're growing at 7% plus. So the government is actually shooting itself on the feet. on the foot by taking away what should ideally be going to
SMEs.
The SMEs.
Yeah.
Creating the jobs for the same youth. We're talking about the need to actually get jobs and all that.
Yeah.
So that's one structural issue that has to be addressed. The government has to really, and if it's not possible, we appreciate there could be some fiscal challenges.
Yeah.
But then what else can the bank do? The government do to still incentivize banks to lend to the SMEs.
Yeah.
And I give an example of Tanzania about 2 years ago, what they did for the agriculture sector. And I think that's something potentially that could be explored by other central banks to see whether there's a possibility. So, from COVID, due to COVID, of course, there were challenges in the food space and all that. So what the Tanzanian government did to try and incentivize banks to lend more to the agriculture sector, they did two things. One was a policy incentive. The other one was a liquidity mechanism. So they basically told banks, they created this 400 and I think 1 billion Tanzania shillings fund that banks could tap into only for lending to
SMEs.
Agribusiness space. Farmers, SMEs in the space. They could take it at I think 3% and could only lend at not more than 10%. That's the first thing. And blend that with their capital to lend to the agriculture sector.
Yeah.
Secondly, they basically came up with an incentive around the minimum statutory reserves. Any loans you've given out under this program will be deducted when you're calculating what you need to maintain as the minimum reserves. So what does that mean? You free additional capital for banks to lend to any other sectors they want to lend. You understand? So it's kind of like a carrot and stick. And so, yes, we understand there are fiscal challenges, but then what can the government do to incentivize banks to do more? So that's on the bank side. You go to the impact investment side. The challenge there is, first of all, Africa is not even getting, to start it as a whole, the biggest chunk of the impact funds, impact flows. Research actually shows we're only getting 12% of the global flows of impact.
12% already.
12%, yes. Yes. You'll be surprised that Europe and US have some of the biggest chunks, even more than developed. Yes. If you look at what the funds that are classified as impact funds, the developing world is, like, if you look at, it's not getting as much. So we're only getting a bit of that. And even when it comes with a lot of conditions
that sometimes conditions
just don't make sense for the local context. So what happens? That's where then we move from the 150 that you're screening, you're only closing 5 to.
Because they don't meet the requirements.
They don't meet the requirement, not because they're not viable businesses. They just don't meet a certain thing. Maybe you don't meet maybe agenda thing or whatever it is, just different things, you're knocked off. And that's why we really have to think of local capital.
Yeah. Local capital, very important.
Very important.
Where would we get this from? What are your proposals as an advisor?
Let's start with the pension funds. Yeah? The pension funds in Kenya are sitting on at least $12 billion.
12 billion?
Yes. The law allows them to allocate at least 10%, at most 10% of that into what you'd call alternative asset classes. So like SME lending and everything. If you look at the allocation to date, is not more than 1%.
It's already 9%.
9%.
So
and even
only
that
1%.
And even that 1%.
So we have another 11%.
No, we have 9%.
9%.
Even that 1% is largely into infrastructure, real estate, what probably call safer bets.
Not on the growth.
Not on the growth.
Something.
Yes. So if you look at $12 billion, 10% of that is $120 million.
Wow.
That is capital potential that will go into
SMEs, growth.
Into SMEs. Okay, let's even say you're not going to do 10%.
Yeah.
Let's just say half of that. $60
million.
No, actually, not $60 million. Sorry. $12 billion, 10% is $1.2 billion.
$1.2 billion.
Yes. So we're talking about $600 million, half of that could easily be allocated to SMEs. Leveraging what already banks are doing. That's already a potential source. It's local capital. It is in Kenya shillings. So it's not dollar, the cost is not increasing and all that. You're not dealing with hedging issues and all that. And it's capital that understands
the local market.
For me, that's one place
That's underutilized and untapped.
Yes.
It's untapped.
Yes.
Why do you think is the case?
There are a lot of, and actually there's a lot of ongoing debates right now. In fact, I think starting last year, especially now with the USAID and others, developing money becoming thinner. The debate is actually growing in Africa. So if you just go and search right now, local capital mobilization online, the number of conferences and all that are speaking about this topic.
Mind-boggling.
It's mind-boggling. Next month I'll be speaking on this topic specifically at one of the conferences here, because I think a bigger challenge has to do with one, again, same pension funds and banks. Where do they place their money? Again, government papers.
Yeah.
Fixed deposits. So yes, we understand it's pension money. They need liquidity. You cannot play with pensioners' funds. So I think one for me is we need to create awareness and help fund managers to actually build an understanding of how to invest in the space and understand what are their fears, what are their challenges, and try and figure out how to address those challenges. And this is a part the government can play. This is a part that any international player that is keen on unlocking that capital can play. Because yes, they have their own fears. Some of them are valid. So how do you address those fears? But secondly, is also look at how these funds are structured. If you look at most trustees for these funds, their terms are normally 3 years. In my view, that is too short
to make any
long-term decision. Yeah. That I'm not going to make a decision to invest in a fund. SME fund in Kenya is going to invest for 5 years or 7 years when my time is 3 years, because I'm going to be judged on the performance of the pension fund within 3 years. So there are many other things. So yes, there are structural issues, but also it's a capacity issue as well, really helping them to understand and then creating the incentives for them to actually do it.
Yeah, but of course, one of their fears is the same fear we probably already touched on, that
yes,
you're not sure.
Yes. Yes.
You're not sure about this SME. You're not sure whether they have the right mindset.
Yeah.
And as you said it in earlier, you have, when you're doing your screening, over and above the requirements, you still said there is an issue of governance and there's a potential issue of management.
Yeah.
So maybe that is where also a bit of the challenges.
Yes.
Yeah. And do you have any proposals or ideas on, what the SMEs need to think about? Because already, if the discussion is beginning, it's just a matter of time.
Yes.
Yeah, that you can have actually an alternative source of growth money.
Yeah.
Yeah. So maybe then, how would SMEs begin preparing themselves so that then when the money is available, then they can tap into the money?
I think I think you talked about, of course, there's just the issue around systems. I think for me that's key. And it's one thing that I think businesses tend to really neglect in terms of really growing with your systems.
That's interesting.
More often than not, the systems are always lagging behind and they're having to catch up. But I think in my view, I will take you back again to the mindset thing.
Yeah.
Why did you start this? What is the motivation for you starting this business? And if it's not a livelihood business,
then just switch to the growth.
Then switch to the growth mindset.
Yes.
And ask yourself, if I was to sell this business in 5 years' time,
at what value?
At this whatever value, whatever it is, what must I do
to make sure
that in 5 years' time
it has that value?
I'm ready. If an entrepreneur takes up that perspective, they don't even have to be told, you need to do this course, you need to bring this advisor on board. They don't have to be told. Because one of the biggest challenges with SMEs is appreciating the value of an advisor and be willing to pay. Many have this mindset that they can do everything. I can be the accountant, I can be the sales and marketing person, I can be the HR person,
I can be the board.
You cannot be.
And also the advisor.
You cannot be. And let me tell you one thing, the best leaders who succeeded in growing their businesses, it's not because they didn't know how to do different things.
No.
It's because they realized
they're limited.
I'm limited, so I need to onboard capacity to free me to think about,
the different entrepreneurial sides,
exactly.
Actually. Yeah, the innovative
visioning,
side.
Strategy, innovation, partnerships, all those things. You can't do that if you're having, I'm signing the check. I'll give you an example of one business, and now it's not doing that well, and I'm not surprised. I remember we were looking at potentially investing in that business, and we went there, and the promoter was in the car about to leave, and there was a line of 7 people with papers coming
to be signed.
To be signed. Not checks, just different documents to be signed. And for me, that was a clear red flag.
And you actually use that to say, look, we're not going to invest here.
The second piece was they didn't have it was already doing more than $10 million. Did not even have a CPA.
Wow.
As a finance person. There was an external guy who was not
sure it
was a person, maybe he was brought in to stage manage whatever. But for me, that was very clear. That business has a challenge. And truth be told, it's actually been sold into in different pieces, bits and pieces. Very sad, but it was actually one of the top businesses in a certain space. I won't mention the sector.
Yeah.
But now it's no longer there.
Because of lack of systems.
Yes. Because
you
think you can do everything.
Yeah.
You think you can't trust people to do things. So, but if you put the right systems in place, then you safeguard around even managing risks and all that, and it frees you then to actually drive the growth of the business. Yeah.
This thing of systems is interesting.
Yeah.
Where do you think is a challenge? Is it that I'm so focused on the, I'm an entrepreneur. I started this in a very difficult way. What is this? Because we really need to get it out.
I wish the other Robert was here today, because he has a way with terminologies around why these businesses have these challenges. Is there a way of we can really bring this?
I think we just need to keep talking about
it. We just need to keep talking about that. Yeah. For me, I think it's just a mindset thing.
Yeah. I think we just need to keep talking about it. And I think, as you asked, very valid question. Okay. So is it for lifestyle?
Yes.
If it is not for lifestyle,
yes,
then it is for growth.
If
it is for growth, then have a growth mindset.
Exactly.
Yeah.
Yes.
And the growth mindset then means you have to eventually bring other people.
Yes.
Allow other people
invest in yourself.
You have
to allow other people to invade that space and
challenge you.
Yes.
Get another way of looking at things.
Yeah.
Get another, govern the place. Get some independent directors.
Yeah.
So this is what we need to probably do.
Yeah.
Yeah. Because possibly from a policy perspective and even from the space of funding, as you say, after the USAID scare, I think there is the possibility that people are beginning to think differently.
Yes.
Yeah. And as a country, of course, then we have to also start thinking about really growing the SMEs. Yeah. And of course, already just looking at the employment world at the moment.
Yeah.
If you really look through the big companies, you kind of we're beginning to find a limitation.
Yeah.
In that people cannot actually be absorbed by the big companies.
Yep.
And that there's a bit of a shift into thinking either you run your own business. Yeah. I was talking to students the other day, and some of them, in fact, in a group of about 26 were saying, look, I'm thinking of doing my own business, which were things that were not there before. So I think we need to really think about this SME world.
We need to.
Yeah.
We
really need to think.
Yeah, we need to.
Okay, very well. What's your parting shot? What would you like to say? I mean, we've talked about many things. We've talked about franchising. We've talked about growth in general. I think our topic was around growth.
Yeah.
And we were able to touch on your MBA thesis on franchising. And then, of course, we've talked to you as an advisor for SMEs on the possibility of how SMEs can also look at other ways of growth.
Yeah.
So what would you like to part with our SMEs in this episode?
I think for me, I think I'll just touch on around the growth topic, and just to say, at the end of the day, I think it all rises and falls with the entrepreneur.
Yeah.
I know the leadership side is like saying it rises and the buck stops with the leader.
Yes.
I think in this case, the buck stops with the entrepreneur.
Yeah.
You have to really decide what it is that you want and pursue that. Now, it doesn't mean the road is going to be easy. Yeah. There are going to be challenges.
Yeah.
But the question is, are you going to stay, and focus on really the end goal?
Yeah.
And, seek as much help as you need. There's no there's nothing wrong with asking for help.
Yeah.
I think this mentality of wanting to be seen that I know everything, I'm in control.
Yeah.
It doesn't help you.
Yeah.
Be vulnerable, be open to be helped, be open to be challenged, and just take it in stride. That's the only way you're going to grow.
Yeah.
Yes.
Fantastic. And as an advisor, how can you be reached? Would you want to advise some SMEs?
So I mostly do not work with SMEs directly, but I'm always happy to point them, if they need help with, like funding, they want to know, how can I get funding? I have networks that can help in terms of linking them up.
Yeah.
Currently, my capacity is a bit limited, but one, for sure, I can link them up with networks.
Yeah.
That's for sure. I can provide, I can point them to the right resources.
Yeah.
Yeah. That's.
And how can you be reached?
Of course, my email is sam.ndonga@gmail.com.
Okay, so sam.ndonga@gmail.com. Yes. If you need any ideas on advisory that Sam can be able to point you to someone, so you can reach him on sam.ndonga@gmail.com.
Yes.
So thank you very much. This has been SME Unleashed. In this episode, we had Sam Ndonga, who has been an alumni here, an MBA student who did a thesis on franchising, and also is in the growth space as a financial advisor. And thank you.